Welcome back to Trade Genius. Let's talk about journaling, one of the most important aspects of being a trader. Let's get in it. The Trade Journal Framework, a structured method for recording, reviewing, and improving every trade you take. Now, why keep a trade journal? A journal turns scattered trades into a feedback loop you can learn from. 1. Spot patterns. Identify which strategies, assets, or setups consistently work and which ones don't. 2. Manage emotions. Track fear, greed, and doubt to recognize if there's any emotional triggers before they cost you. 3. Improve discipline. Compare your reasoning to outcomes and tighten your process over time. What to record? Trade mechanics. We want to record our date and time. You want to record your entry and exit timestamps for every trade. The time you got in the trade, the time you exited the trade. Very important. You want to record your asset. You want to specify the exact ticker or the currency pair you traded. Position size. You want to always record the amount of contracts you traded, whether you trade minis or micros, and how many. Your entry and exit points. Record the prices for both entry and exit. If you happen to take a base hit and leave runners, you want to record those exits as well. And of course, your strategy. Document the strategy. What strategy did you use? Did you use a support and resistance? Were you scalping? Were you using a structured trade? Were you using the open range breakout? Whatever strategy that is, document it. Now you want to focus on the context and the reflection. You want to make sure you're recording your trade direction. Was I in a long? Was I in a short? You also want to record your outcome. Was the trade profitable or not profitable? And you always want to list the amount of your P&L. Also want to record your reasoning, why you entered the trade and what you expected. You know, if your trade set up, that's what you want to put. What strategy you use. You know, what were your steps for that strategy? You know, why'd you enter? You know, was it, if you have a particular strategy, did your strategy set up? And if it did, list that. List the steps that you saw. And when you saw that, what you expected to happen, whether it was going to be a buy or sell, and write it down. It's very important. Next would be your emotions. You always want to be auditing your emotions. When I took this trade, was I fearful? Was I greedy? Did I doubt it? Was I had lack of confidence? Was I overconfident? Whatever your emotions were. If your emotions were stoic, then you would put, my emotions were stoic. Just whatever emotions you were feeling when you entered the trade, and also the emotions you were feeling when you exited the trade. Next, you always want to take some side notes, other observations and comments. Was it news? You know, was there news that day? Was there a weak opening gap that price was closing? Were you trading above or below the 8% line? You know, all of those things, any kind of side note is what also you would list. This is a sample journal. This is what your sample journal would look like. Date and time, the entry, your exit, the asset, no matter what the asset was, your direction and size. I was long on 50 shares, what the risk was, your entry and exit price. My entry was 185, I exit at 189.40, whatever that is. Your strategy, these are breakout above a 20-day moving average, whatever strategy you use. Your outcome, it was profitable. P&L of 220, it was a 2.4%. You know, you can always put your R&R there as well. Was it a 2-to-1, 1-to-1, 3-to-1, whatever that was? Your reasoning that you took that trade. You know, in this example, volume surge, confirmed the breakout, expect a continuation toward resistance at 192. Your reasoning, why'd you take that trade? Next, your emotions. I was confident at entry, slight anxiety holding through the midday dip. When I exited, I was feeling good. I was overconfident. I was confident, whatever that was, whatever your emotions was at that moment. Make sure you list that, you record that. It's very important information. And then notes. I exited early on a news headline. I'm gonna consider a wider stop next time. Or let's say you placed your stop loss too tight. You placed it it was placed at the wrong spot. You want to list that as well. Like any kind of side notes, anything that has to do with the trade that may be out scope of emotions, reasoning, outcome, strategy, entry and exit price, direction and size, asset, and date and time. Anything outside of that is worthy of putting it in your notes. It's your side notes. Now, best practices for journaling. You want to log every trade immediately. It's very important you do that, meaning within minutes while the details are still fresh. Don't wait. Do it immediately. Also, you want to be honest about your emotions. The goal is self-awareness. It's not about having a polished record. Just be honest. However you're feeling, write it down. This is just you on you. Just be totally transparent with yourself. You want to review your journal weekly. You want to look for repeated mistakes, or if there's any recurring winning patterns or any pattern of any sort. You want to try to identify that. That's why I recommend journaling all week and going through your journal on the weekend. So now you have a whole week of compiled data. You want to tag your trades by strategy so you can measure the performance per approach, right? So if that was let's say you took a support and resistance trade, all your support and resistance trades, they should be tagged, and maybe you tag them SR or whatever other strategy that you were taking. Just tag it. Make sure you have that identified on there so you know the strategy that you took for that trade. Like tag it. You also want to track your win rate and your average profit, loss, and size, not just the outcomes. You also want to track your numbers. So make sure you're doing that. Make sure you understand that. Track your win rate. And as I stated, the average profit, loss, and size. And also you want to use your journal to set one specific improvement goal each week, no matter what that is. If you're journaling consistently every day and you're adding all these components that we're talking about, you will definitely be able to set one specific improvement goal each week, no matter what that is. That could be, I want to make sure I enter this trade much quicker, or how would I say, much more efficiently, meaning you're getting in there right when you need to get in there, meaning placing that entry, right? Or you want to work on being able to hold your trade. Let's say your emotions get the best of you and you exit. An improvement goal could be, I'm going to work on holding my trades. That's definitely another example of an improvement goal. But make sure you set one every week. Very, very important. Now, step 3, you want to analyze, right? You got all this data, you got all this analytics. Now it's time to analyze, right? Think about it. Your journal is only as valuable as the insights you pull from it, right? In order to pull good insights from your journal, you have to make sure you're inputting good information. That's why it's very important to be transparent. Whatever you're feeling, whatever's going on, list everything. You're not in a contest. Your journal is not to be pretty. It's not to look like there's a polished trader here. You want to make sure that you are entering everything based on exactly the way that it went. So this way, when it comes time for step 3 to analyze, you have perfect analytics to do that, because this is going to be the most important part right here. Now, as I stated, you want to identify your patterns. Look for recurring patterns in your trade, both successful and unsuccessful. What are you doing? Are there anything different that I'm doing? Maybe when I'm trading at a particular time, I tend to have these emotions, or when I'm trading a particular strategy, I tend to have these kinds of emotions. I notice I'm not able to hold. I notice I am exiting my trades too soon. Maybe you're going to identify that you have a pattern where you're holding the trade too long. So just think about those things. You want to track your performance. You want to analyze your overall profit and loss to assess your trading performance, right? You want to go and look at all of those trades. This is tracking your performance. Will be something that you can do weekly, but that would possibly be better even doing it over the month, right? Now you have a whole month of data to track your performance, right? So you can look at remember, we have 20 trading days every month. You have 20 days to track your performance. So for tracking your performance, as I stated, it'd be better to do that over a monthly time frame, right? And just look at all the trades, and then you can lump all of your strategy, all the trades of the strategies, the same strategies that you've took, lump those together, track the performance on those, and do the same thing with any other strategies that you may trade. Then you want to evaluate your strategies. You want to assess the effectiveness of your trading strategies based on your journal, right? On that data. You definitely want to make sure you assess that. It's very, very important. You want to see how effective it is. Once you identify the patterns, once you track your performance, you'll be able to assess the effectiveness, right? Because you're going to have that data right there. And then also too, you want to identify any weaknesses, pinpoint areas where you need to improve your trading skills or the particular strategy. You can only get this by making sure you're inputting the correct information. As I stated earlier, if you just want to look like you're a polished trader and you're just putting what you want to be in there, I can promise you, you're not going to have the correct data and analytics to be able to do step 3. Step 3 is very, very important. But step 3 relies on step 1 and step 2 to be accurate. Now, once again, the power of journaling immediately. As soon as you've entered the trade, write down your thoughts and observations immediately before the trade itself takes over your attention, right? So just remember, as soon as you know you're going to enter, if you have a limit order set and you're not even in a trade yet, you can already start journaling. If you have a limit order set, you know what? The strategy, the entry point, you got some emotions of how you're feeling. You also can answer why you set that limit order. Like you already have maybe half of your trading components listed, possibly even before you get into the trade. You're going to know your take profit. You're going to know your stop loss. You'll be able to measure your risk. Like you'll have a lot of stuff already down and written in your journal prior to even price tapping you in. So you want to be quick about it, right? Because once the trade starts, think about it. The trade is definitely going to have your attention. But if you already are proactive and you're writing this information down prior, like everything you can prior to the price tapping you in and entering the trade, that's going to work for you in the long run. It's going to be a very, very conducive situation for you. It's going to make your time journaling that much more easier and that much more seamless. And remember, this simple habit is going to shift your focus from the trade's outcome to your own actions and process, which are really the things you can actually control. Because once you're in a trade, we're in a trade. There's no more control once we're in the trade. The only thing we can do at that point is exit. That's it. Set a couple of maybe even set some TPs, something like that. Move some TPs around, move a stop loss around. That's about it. But as far as being in a trade, we're already in a trade. And think about this. All of these are small steps, right? And they compound in a major way over time. And that's what you want to make sure that you're doing. So once you get in that trade, make sure that you are journaling every single trade. I cannot stress the importance of journaling your trades. You guys know something that we talk about all the time on stream, and it's very, very important that you use this trade journaling framework as your guide. And along the way, there may be some tweaks to information that you add, but I would definitely say the trade journal framework is definitely one of, I would say, the best components that you can use in your trading, as well as adding your journal to your trading. So just keep that in mind. Without journaling, you are basically setting yourself up for failure, because you will have no analytics, no data, nothing to help you identify patterns, whether they're good, bad, or indifferent. Identify how well your trades are going. You won't be able to track that. You won't be able to track your emotions. And without that data, it's going to hinder your trading overall. With that data, it will allow you to close your learning curve, because you're going to have a bird's eye view into what you're doing when it comes to trading. It's just like when you're back testing, right? When you're back testing, if you're using like FX Replay or something to that nature, it's going to have all the analytics for you, right? Journaling is going to do the same things. Maybe your strategy has a low win rate on Wednesdays. Maybe you may decide not to take it on Wednesdays. You know, it could be something of that nature. But you won't be able to identify any of these patterns without actually journaling all your trades and putting in the work to make sure that you have all the analytics you need to be able to assess and track your performance. I hope this video helped you. If it does, please comment, like, let me know. I'm very interested to know. Remember, all the content that I put out is content to help you get your trading business on point, number one, but also to help keep it intact. And with that stated, let me know in the comment section if this helped you. Thanks for tuning in, and we catch you on the next gem.